To say our housing market in California has been very volatile over the past few months is an understatement. Our housing market has shifted greatly over the past few months due to rising mortgage rates. So in today's video, I'm going to share an update regarding the housing markets in Sacramento, California, Los Angeles, as well as San Jose, California. So with that said, I have so much to share in today's video. So let's first talk about Sacramento, California, where I live and work as a real estate agent here. I'll give you my honest opinion regarding our housing market here, according to the latest trends from Redfin as well as altosresearch.com. So let's look at new listings. I'm going to be looking at pending home sales as well as active listing inventory, in other words, housing supply, as well as home prices, of course, and also price reductions by city here. So in Sacramento, California, new listings are down by 30.8% compared to the same time period 1 year ago. And by the way, this is the average over the 4 weeks ending October 2nd of this year. So down big time, 30.8%. The number of new listings have been declining ever since really the spring months, ever since May, for example, here, where new listings started to decrease. So we're seeing this giant decrease of new listings. Let's have a look at active listings. Active listings are up by 27.62% from the same time period 1 year ago. So we have far more houses listed for sale right now compared to 1 year ago. But a gain of 28% more or less is actually less than what we saw about a month ago, where we saw 40% gains on a year-over-year basis. So even though we have far more houses listed for sale in Sacramento from a year ago, it's not as high as August, for example, where we had approximately or just under 6,000 houses for sale. Now we have approximately 5,300 houses for sale. So let's look at pending home sales, because one would assume if home buyer demand is very, very strong, you would assume if we have a lot more houses for sale, you would assume we have a lot more pending home sales. Now let's have a look at that. Pending home sales are down big time, 45.44%. So a giant decrease in the number of contracts being signed between home buyers and home sellers, despite the fact we have far more houses for sale. That's clearly telling me that home buying demand is decreasing greatly in Sacramento, given the fact we have more houses for sale, but we have a giant decrease of pending home sales. And because we're seeing this huge pullback of home buying demand right now in Sacramento, we're also seeing a huge increase in the share of price drops as well. So right now, according to altosresearch.com, the share of price reductions is 52.5%. So approximately 52% of houses listed for sale right now have already had price drops. This is a lot different compared to 1 year ago, because 1 year ago, the share was approximately 30.9%. Back in 2020, it was about 27%. And pre-COVID, back in October 2019, the share was only 41%. Now we're at 52%. What's crazy as well is that look at this trajectory, because the share of price reductions has basically been skyrocketing ever since April this year. So on April 1st of this year, the share was only 15%. Now it's 52%. Clearly, home buying demand is decreasing greatly because the share of price reductions right now is at least a 3-year high. All right, let's change gears slightly and talk about home prices in Sacramento, California, and look at the median sold price over the past few years. So right now, again, for the 4 weeks ending October 2nd, the median sold price is $555,000. But look at the year-over-year change, only an increase by 2%. From 2021, which is pretty mind-blowing, because look at 2021. At this time in 2021, home prices increased by 15% compared to 2020. Also in 2020 compared to 2019, home prices increased by 14%. So we went from 14% to 15%, now only a 2% increase on a year-over-year basis. And by the way, this 2% increase on a year-over-year basis is lower than pre-COVID back in 2019. Because during this time in 2019, the year-over-year increase of home prices, or the median sold price, was up by 4%. Now it's only up by 2%. Also look at this, because take a look at this. Let's look at the spring months of this year. Home prices were increasing in the range of 17% to about 15% until we hit right here. This more or less was the peak of our housing market, was actually right here for the 4 weeks ending May 22nd this year, when the median sold price was $614,000. Now the median sold price is only $555,000. Therefore, the median sold price over the past 5 months alone has decreased about 9.6% in Sacramento. One quick note I want to mention regarding this trend we're seeing right now is that on a national level, home prices have decreased about 6% over the past several months now. So Sacramento is decreasing just a little bit more compared to the national averages. But the one point I definitely wanted to bring to your attention though is that this could be a lot worse if the number of new listings were skyrocketing in Sacramento. But as I mentioned earlier though, new listings are down by 31% from 1 year ago. If the number of new listings were absolutely skyrocketing versus a huge decrease by 31%, if we saw a huge increase in the number of new listings over the long-term trend, this would cause a huge impact to our housing market. But this right here is really our saving grace because we're not seeing enough houses being listed for sale to cause a huge correction in our housing market right now. Of course, make sure you're subscribed to this channel and I'll definitely keep you posted because a lot could change, right? With that said, let's talk about Los Angeles. So new listings are down by 34.6% on a year-over-year basis. And just like Sacramento, we're seeing this giant decrease in the number of new listings ever since really the summer months of this year. So down by 34.6% of new listings. Let's look at active listings though. In Los Angeles, active listings are actually down compared to 2021, which is right here. So active listings, which of course is housing supply, is down by 5.11% from the same time period in 2021. Now this is vastly different compared to January 1st, because on January 1st, we were down by 27.78%, but now we're down by only 5.11%. Again, just like Sacramento though, we're not seeing this giant increase of housing supply like we once did earlier this year. In fact, according to Redfin right here, we're seeing a decrease of active listings ever since the summer months of this year. So that's housing supply. Let's have a look at pending home sales in Los Angeles. Pending home sales are down by 33.6% from 2021. Now that's pretty remarkable. Look at that though. Beginning of 2021 as well as 2022 this year, we more or less had the same number of pending home sales for the first 3 months of this year. But ever since then, pendings decreased greatly, whereas in 2021, we saw an increase of pendings. So down greatly right now, down by 33.6%. Let's have a look at the share of price reductions in Los Angeles though, according to altosresearch.com for Los Angeles. So Los Angeles price reductions right now, the share is 41.64%. Fewer than what we're seeing in Sacramento, but very close to the national average. I believe the national average as of today is 42%. So right on par with the national averages regarding price reductions in Los Angeles. But look at this, because the share of price drops in Los Angeles has been skyrocketing greatly ever since May of this year here. As you can see right here, on May 6th, the share of price drops was only 19%. Now it's 41%. 1 year ago, it was 25%. Back in 2020, it was about 33%, and pre-COVID, it was approximately 35%. So clearly, because the share of price drops has been absolutely skyrocketing over the past several months, it's clear to me that home buying demand is decreasing. So let's have a look at home prices in Los Angeles. So here's the median sold price in Los Angeles, up by only 3% on a year-over-year basis. Let's tie in 2020 as well. So 2021, this time, we were up by 13%. 2020 up by 13% as well, and pre-COVID up by 5%. So the changes right now is more or less on par with the lower range of the long-term averages for home price gains, only up by 3%. Compare this to the 4 weeks ending June 19th, we were up by 10%. Compare this to January, we're up by 15%. Let's look at 2021. So every single month or every single week in 2021 had a gain of over 10%. Look at that. Look at that. Back right here, look at this. 24% increase, 25%, 27% increase during the middle of June of last year compared to 9% this year. So this was the peak of the market where the median sold price in Los Angeles was $898,000. Now it's $841,000. And by my dumb math, that's a decrease by 6%. Here's something else you guys should be aware of as well. When I was kind of playing around on Redfin's housing market data's website, which by the way, it's redfin.com/news/data center. If you guys just Google Redfin data center, you can have a look at the stats I'm sharing with you today. But look at this. Here's the average sale to list price ratio. So right now, the ratio is just under 100%, meaning that home sellers are selling their houses for about what they're asking for. So just under what they're asking for by what? 0.2%. But there's a couple things I want to mention regarding this, because the levels we have right now are very close to levels we saw back in 2019. However, though, look at 2021, because right now the ratio is about 100%. At this time in 2021, the ratio was 100.3%. So on average, home sellers selling their houses for about 3% more than their asking price. But look at this. During the 4 weeks ending April 24th of this year, home sellers were getting 5% or almost 6% over their asking price. So in the span of about 6 months, home sellers were selling their houses for far more than their asking price. Now they're selling it for just less than their asking price. So some drastic changes in our housing market here in Los Angeles. Let's have a look at San Jose, California, though. So new listings in San Jose, California, which by the way is about an hour and a half south of San Francisco in the Silicon Valley, down by 30.2% on a year-over-year basis. So we're seeing a huge decrease in the number of new listings, just like Los Angeles as well as Sacramento. Let's look at pending home sales, though. Pending home sales are down, look at that, down 40% from 2021. And look at that. I mean, right when this hit right here, which is more or less April, the number of pending home sales started peeling away from 2021. Has been declining more or less ever since that time frame here, but down by almost 40% from 1 year ago. Let's look at active listings, though, or housing supply in San Jose. So we more or less had the same number of houses for sale in San Jose compared to the same time period in 2021. And this is vastly different compared to really January 1st, or let's just call it the middle of January. We saw a huge run up of active listings ever since August. Once we hit August, the number of active listings started to decrease. And look at this, January 1st, we were down by 50% from 2021. Now we more or less have the same number of houses for sale, just like we did during this time frame right here, which more or less was May. So we have more or less the same houses listed for sale right now, which is pretty eye-opening given the fact that pendings are down by almost 40%. So I'm guessing the share of price drops in San Jose, California has been increasing greatly as well. So here's San Jose, California. The share of price drops, according to altosresearch.com, is at 43.65%. But look at this. April 29th, the share of price reductions was only 5.7%. What? I haven't seen this. This is crazy. 5.7%, and it shot up all the way until 46%. So on August or April 22nd, the share was just under 6. And then more or less, 4 months later, it shot up to 46%. Wow, that's nuts. Okay, sorry, I haven't looked at this data yet. I'm like speechless. That's just crazy trajectory. I haven't seen a giant increase like that in any of these markets I follow. Anyways, 43.65%. In 2021, it was 16%. 2020, 22%. Pre-COVID, it was 42.61%. So the share of price reductions is on par with pre-COVID, interesting enough, but far higher compared to the levels we saw over the past couple of years now. So I'm guessing because the share of price reductions has been absolutely skyrocketing, I'm guessing that the median sold price has been declining. But let's have a look at that. The median sold price in San Jose, California is $1.36 million, but only up by 2% from 2021. And again, I'll add 2020 right here. 2021 at this time, up by 13%. In 2020 at this time, home values were up by 10% again. In 2019, down by 2%. So the rate right now is higher compared to pre-COVID, but far less compared to 2021 as well as 2020. Also going back to the spring months this year, look at this. During the 4 weeks ending May 15th of this year, the median sold price increased by 19% on a year-over-year basis. Absolutely insane. Now it's only 2%. Let's look at the peak though too. So the median sold price 1.625 million. Now it's just under 1.4 million. And check this out, because I actually did the math on this. We went from a 1.6 million median sold price to more or less a 1.4 million median sold price. That's a decrease by 16% over the past several months, or past 5 months. So the median sold price has decreased by 16% in San Jose, California ever since the middle of May of this year. And I actually just did the math on this regarding the changes in home prices in 2020 or 2019, for example, during the same time frame. So again, 1.625 million, but back in 2019, it was 1.169 million. And back in the 4 weeks ending September 29th, 2019, the median sold price was $1,065,000. So by my math, that's a decline by 8.9%. So the decline we saw in 2019 is not as great as what we're seeing right now, because by my math again, we're seeing prices declining by 16% over the past 5 months. And with that said, let's have a look at the average sale price to list price ratio, because before I click on this right here, it's very common for houses in San Jose, as well as the entire Bay Area, to be sold for far more than their asking price. Let's have a look at the changes though, and look at that. So the median sold price, not the median sold price, the average sale to list price ratio right now is actually at 100%. So home sellers selling their houses for about what they're asking for. But compare this to, let me get rid of 2020. Compare this to 2021 at this time, the ratio was at 106%. So home sellers selling their houses for 6% over their asking price. Now they're selling it for their asking price right now. Also look at this, because this is pretty eye-opening here. I cannot believe this. Look at this. So during the spring months this year, the ratio was more or less at 114%, meaning sellers selling their houses for 14% more than their asking price, which is mind-blowing given the fact that the median sold price is over $1 million. But look at this though. This is back in February and March of this year. Well over, this is crazy, 14% over the asking price. Now they're selling for more or less their asking price, which really hit right here, which is the 4 weeks ending August 7th of this year. So in the span of more or less 6 months, we went from 14% over the asking price to getting their asking price on average. It's also worth noting that back in 2021, we didn't have any single week where the ratio was actually below 102%. So every single week back in 2021, it was over 102%. But the drastic change that we're seeing right now is just absolutely eye-opening. And with that said, please comment below your biggest takeaways from today's video. Also, if you guys got any value in this video whatsoever, then please hit the like button. I greatly appreciate that. Hope you guys have an awesome day. I don't know, I can't talk. And see you in the next video.